Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, click on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber. Monday, March 21st, 4:49 p.m. New York time, U.S. stock markets closed. First full day of a new week just done. We'll look at the weekly charts. Why? Because last week interest rates were raised. Last week had a huge bullish candle on the Dow Jones Industrial Average Index. So we want to compare with, are the 30 stocks in it making new highs from last week? Or are they still inside the range of last week? Plus, are they making new highs for the year? Where's leadership? Looking here at this chart here, the Dow Jones Industrial Average, again, this green candle was all the trading range of last week. And today, first day of the new week, we closed red, but we made a higher high than last week, and we closed back inside. Okay, so that long green candle could be interpreted as a pole, and we could be forming a flag, a bullish flag, possible. These two bodies, the top of these two bodies here, around 35,000 level. That's a resistance level from before, also referred to as supply zone. And these two high tills also are resistance area. So potentially those areas in the future, when they get retested, may have resistance there, may have sellers there. Let's go look at the 30 stocks inside. First, looking at Apple. It performed better for the week, for the day. It closed green. It closed above the high of last week. So Apple is stronger than the index for the day. Apple still is way off the highs of the year. Here's the highs for the year. Here we are. But again, it outperformed the index so far. AMGN, Alpha Mike Golf November. Look at that. Also closed red for the week. But it's making a higher high, higher low, and closed above the prior week, gutting for that high. That's interesting. Again, small trading ranges today, plus today, look at these red candles. We close pretty much either at or just below the midpoint. That's a bearish bias on the candle. American Express, red, small trading range. Again, there wasn't much news today. And some activity they're waiting for, some event they're waiting for. Bravo Alpha, well, no surprise. Inside candle, yep, inside candle. Indecision. Caterpillar, Charlie Alpha Tango, green, higher high, higher low, closing so far above the prior week. That's good. It's outperforming the index. So we have a few of them already outperforming the index. Charlie Romeo Mike, inside candle, indecision. Wow. It's building a huge consolidation down here. Cisco, red, did make a higher high, small trading range. Not only small trading range, so far it closed and opened nearly the same price. That little body, yeah. And huge consolidation in here. CVX, Chevron, inside candle. Again, this was the high flyer for this year, as well as last year. Demand zone buyers here. Disney, Delta India Sierra, inside candle. Yep, very close to the lows of the year. In acceleration phase. Delta Oscar Whiskey, Dow, new high for the year, outstanding. Green, higher low than last week. Yep, again, small trading range. That's good. So that's right now one of the better ones. Goldman Sachs, inside candle. That's not good. No. But it didn't take out the midpoint of the prior candle. So again, looking like a bullish pattern setting up. Home Depot. So this gap down back here, I'll zoom in. Look, when it gapped down, half of it's gotten filled, but it hasn't completely filled it yet, that orange horizontal line. Inside candle for the week too. Yeah. Retail is struggling across the board from so many industries within the retail. Hotel Oscar November, inside candle. Interesting. Excuse me. Apologize. So again, the retail, which is really broad for the brick and mortar and online. IBM, red, but made a higher high, higher low. And the retail, I'm not going to dig too deep in this video, but some of the retail, let's just say software retail, is not struggling as much since a lot of it's sent electronically. But the brick and mortar depends on transportation logistics, and the embedded cost of fuel affects them more. So it's not a surprise there's a gap between certain retail that's doing better and ones that are still struggling. Intel, red, small trading range, really small. Johnson & Johnson made a new high for the year, outstanding, but trading back inside the prior week range. JP Morgan, another financial, still inside the range of last week. These big banks. Yeah. So next month is earnings for a lot of companies. And how will these big banks cook the books to make it look like they're not as bad as a lot of people are saying how bad they are with their investments in financial instruments or nations that have been exposed to a lot of risk for the past several weeks during the incident with Mother Russia. Yeah. Kilo, Oscar. Well, gapped up, nice, green, higher high, higher low. McDonald's, Mike, Sierra, Delta, red, inside the prior week. 3M, Mike, also tiny little trading range. Mike, Romeo, Kilo, Merck, made a higher high, higher low than last week, and it closed red. Microsoft, inside candle. And Nike, green, back inside the range. Procter Gamble, inside candle, tiny range. Again, it's Monday, not a surprise it's such a small trading range. But again, last week was a huge above average trading range of prices. Tango Romeo Mike, all-time new high for the year, financials. Again, whoever is the CEO of that company and the leadership making this company do very well. I wonder what criminal activity they're doing to screw the customers. Yeah. Outstanding. Might want to see who's the board members and who's the CEO of this company. How are they doing so well versus the other financials? Yeah. Or maybe anyway, their business model. UNH, Uniform November Hotel, all-time new high for the year. And Visa, another financial, small trading range. And Verizon Communications, look at that. Inside candle near the bottom of the pole. Again, I'm calling that long trading range pole. Totally inverse from the index. So you could call this right now forming a bull flag, and this is forming a bear flag. Not good. Very bad for Verizon. Let's look at AT&T again. Much more consolidation. Yeah, big difference. Big difference. Wow. Whiskey Bravo Alpha. There we go. Red. Deep inside the retracement of the other candle. And Walmart made a new higher than last week, already back inside the prior week's range. Let's take that down. Let's just go back here at Disney. So see how Disney is? It's above that gap and above that water. Let's look at its competition, Netflix. There we go. Yeah. And the financials. This is a stock sector. XOF is the financials. Yep. So the majority of them are doing the same thing like we just saw there. And we're putting Goldman Sachs because it's part of it. Oops. There we go. Similar, and JP Morgan. Yep. There we go. So majority of them are not at new highs. Good portion of them not take out the highs even of last week. So if you're in the index alone, that's better. But we already saw several of them that are outstanding. Yeah. Some of them are just struggling. So the takeaway is the more conservative would be in the index. Yeah, the index. As well, we're not exactly overextended on some of these stocks because they're so low to the lows. But the index, comparing to a lot of them, well, is not as equal. So that just shows that there's very few of these stocks here that are performing well enough to move up the index. Again, consolidations, find a few of them with consolidations. That's a trend. Consolidation. So since the majority of them are either in consolidation phases or trending down, massive consolidation, until some of these break out of these trends and go higher highs, that's hurting the index. And the index is basically on those 30 companies. Even though some of them are hitting new highs, they're not the percentage-wise that make up the larger percentage of the index. Yeah. So what do we do? Throw out the retail? Do we start putting in more tech companies? No, because you have other indexes to do that. Yeah. Again, not surprised. This week and next week could be a huge accumulation and distribution because we're coming into the end of the month of the first quarter and earnings next month. So a lot of institutions will be adjusting their portfolios, getting rid of garbage and putting on things that are doing really good financial instruments. So we're going to see some pump and dump of the big companies.